Welcome back to Captain Silver. And while every American is feeling the sudden brutal pain at the gas pump today, with oil exploding to $90 a barrel, while people are watching their cost of living skyrocket and their paychecks buy less and less, they are completely missing how this exact geopolitical trap just broke the physical silver market and pushed the spot price back to $84. This is not a coincidence. This is not random market noise. This is cause and effect. This is the direct connection between energy costs and precious metals that the mainstream financial media will never explain to you. Because if they explain it, if they actually connect the dots between the Middle East war and the Strait of Hormuz blockade and the oil spike and the silver supply chain collapse, people would panic and rush into physical assets and the paper system would implode immediately. So let me connect those dots for you right now. The military escalation between the United States and Iran is threatening to close the Strait of Hormuz, which is the choke point for 20% of the world's oil supply. That threat is what just pushed oil to $90. And that same threat is what just broke the physical silver supply chain and forced the spot price back to $84 because you cannot mine silver without energy. You cannot refine silver without energy. You cannot transport silver without energy. And when energy costs go vertical, the entire cost structure of the physical silver market shifts higher. The suits want me to tell you this is not financial advice, and they are absolutely right. This is not financial advice. This is a macroeconomic breakdown of how the geopolitical crisis in the Middle East is directly destroying the physical supply chain for precious metals and why $90 oil is the catalyst that breaks the paper manipulation scheme forever. Let me know in the comments below right now because I need to hear from this community. Are you feeling the massive inflation at the pump right now? Are you watching diesel prices spike? Are you watching your grocery bills climb? Are you watching your cost of living explode while your income stays flat? And what are you doing to protect your purchasing power? Are you converting your dollars into hard assets? Are you buying physical silver and gold? Or are you just sitting there hoping this is temporary? Hoping the government is going to fix it? Hoping things are going to go back to normal? Drop a comment right now. Tell me what you are feeling and what you are doing about it. Because your answer to that question is going to determine whether you survive the next phase of this crisis or whether you get financially destroyed by the stagflation nightmare that is unfolding right now. Now let me break down the crisis in the Middle East and explain exactly why $90 oil is a death sentence for the paper silver market. The Strait of Hormuz is a narrow waterway between Iran and Oman that connects the Persian Gulf to the Gulf of Oman and then to the Arabian Sea. It is about 21 miles wide at its narrowest point. And every single day, approximately 15 million barrels of oil flow through that strait on tankers heading to markets around the world. That is 20% of global oil consumption. That is oil from Saudi Arabia, Kuwait, the UAE, Iraq, Iran. All of it has to pass through the Strait of Hormuz to reach global markets. And right now, that strait is under threat of closure because of the military escalation between the United States and Iran. The United States just deployed the Navy to escort oil tankers through the strait. Iran has threatened to close the strait in retaliation for U.S. military actions. Iranian forces have been conducting military exercises in the area. There have been attacks on shipping. There have been threats. And the market is starting to price in the very real possibility that this strait could be closed or severely disrupted for an extended period. When the market prices in that risk, when traders and institutional buyers start calculating the probability of losing 20% of global oil supply, the price of oil goes up. That is basic supply and demand. If you think supply is going to be cut, you buy now before the price goes higher. And that buying pressure is what just pushed oil from $75 or $80 up to $90. And it is not going to stop at 90. If the Strait of Hormuz actually closes, if those 15 million barrels a day stop flowing, oil is going to 100, 120, 150, maybe higher. Because you cannot replace 15 million barrels a day of oil production overnight. There is no spare capacity sitting around waiting to be turned on. The global oil market is tight. Production is constrained. And if you lose 20% of supply, the price has to spike high enough to destroy demand and bring the market back into balance. Now let me explain why $90 oil is a death sentence for the paper silver market and why this is directly connected to the spot price bouncing back to $84. Silver is not just a monetary metal. Silver is an industrial commodity. And getting silver from the ground to your hand requires massive amounts of energy at every single step of the process. First, you have to mine the silver. Mining requires diesel fuel to run the heavy equipment. Diesel to power the trucks that move the ore. Diesel to power the generators that run the mine if you are in a remote location. Mining is one of the most energy-intensive industries on the planet. When diesel prices spike, when oil goes from $70 to $90, the cost to mine an ounce of silver goes up immediately. Then you have to process the ore. You have to crush the rock. You have to separate the silver from the other minerals using chemical processes and electricity. Lots of electricity. Refining and processing require massive amounts of electrical power. And where does electrical power come from? Natural gas, coal, oil. When energy prices spike, when the cost of natural gas goes up because of geopolitical uncertainty, the cost to refine silver goes up. Then you have to mint the silver into coins or cast it into bars. That requires more energy. You have to melt the metal. You have to run the minting presses. You have to run the casting equipment. All of that requires electricity. Then you have to transport the finished product. You have to ship it from the refinery to the distributor. From the distributor to the dealer. From the dealer to the customer. All of that requires diesel fuel for trucks, bunker fuel for ships, jet fuel for planes if you are doing expedited shipping. Every single step of the physical silver supply chain is energy intensive. So when oil goes from $70 to $90, when diesel prices spike, when natural gas prices spike because of the Middle East crisis, the entire cost structure of the physical silver market shifts higher. The floor price, the minimum price at which miners and refiners are willing to produce and sell silver, that floor price goes up. Because if it costs you more energy to produce an ounce of silver, you are not going to sell that silver for less than your production cost. You are going to demand a higher price, or you are going to shut down production. And this is exactly why the spot price just bounced back to $84. The market is pricing in a catastrophic supply shortage. The market is looking at $90 oil and calculating that the cost to mine, refine, and transport physical silver just spiked. The market is looking at the Strait of Hormuz crisis and realizing that if global shipping traffic halts, if freight costs go vertical, if diesel becomes prohibitively expensive, the physical supply chain for silver is going to freeze. And when supply freezes and demand stays high or even increases because people are fleeing into hard assets to protect against inflation, the price has to go up. But here is what most people do not understand. The paper silver market, the futures market on the COMEX, that market can suppress the price temporarily by flooding the market with naked shorts and paper contracts. But the paper market cannot change the physical reality. The paper market cannot make diesel cheaper. The paper market cannot make electricity cheaper. The paper market cannot make freight costs go down. The paper market operates on the assumption that most contracts will settle in cash and nobody will demand physical delivery. But when the energy crisis makes it impossible or uneconomical to produce and deliver physical silver, the paper market breaks. Because you cannot deliver metal that does not exist or that costs $200 to produce when the paper price says it is worth $84. Let me give you a concrete example of how this works. Imagine you are a silver miner in Mexico. Your all-in production cost, including energy, labor, equipment, everything, used to be $50. This is the decision that miners all over the world are facing right now. And when a significant portion of miners decide to reduce production or shut down temporarily because energy costs are too high, the global silver supply contracts. And when supply contracts and demand stays high, the price goes up. This is not manipulation. This is not speculation. This is basic economics. You cannot produce a commodity below the cost of production for very long. Eventually, the price has to rise to cover the increased costs or production has to shut down. The mainstream news will talk about gas prices. They will show you the number at the pump going up. They will interview people complaining about how expensive it is to fill their tank. But they will never connect the dots to the silver supply chain. They will never explain that the same energy crisis that is making gas expensive is also making silver production expensive. They will never explain that $90 oil is going to force the physical silver price higher regardless of what the paper futures market does. If this channel's deep macroeconomic research helps you understand the connection between energy costs and precious metals prices, if it helps you see why the geopolitical crisis is directly breaking the silver market, then consider hitting that super thanks button below to support this work. This is how I fund the research that connects dots the mainstream will not connect. Now let me give you the action plan because $90 oil guarantees we are entering a brutal period of stagflation, and you need to understand what that means for your wealth. Stagflation is the combination of stagnant economic growth and accelerating inflation. You must convert your dying fiat dollars into scarce tangible hard assets like physical silver before the freight costs make it impossible to acquire. Because here is what is going to happen as this energy crisis continues. Right now you can still buy physical silver. Dealers have inventory. Premiums are $6 to $10 over spot. Shipping is available. You can place an order and get your metal delivered in a few weeks. But as oil stays at 90 or goes to 100 or higher, as diesel becomes more expensive, as freight costs spike, the ability to move physical metal from point A to point B becomes more difficult and more expensive. Imagine trying to ship silver from a refinery in Switzerland to a dealer in Texas when diesel is $8 or $10 a gallon. The freight cost alone might be $20 or $30 per ounce. That gets added to the premium. So suddenly instead of paying $84 spot plus $8 premium, you are paying $84 plus $30. And if the situation gets bad enough, if diesel becomes scarce or rationed, you might not be able to get shipments at all. The metal exists, but you cannot get it delivered because the transportation infrastructure has broken down. This is not theoretical. This is what happens during energy crises. During the oil shocks of the 1970s, there were gas shortages, rationing, long lines at the pump. If we get to that point again, if the Strait of Hormuz closes and oil spikes to 150 and there are actual supply shortages, the global freight network is going to seize up. And when that happens, physical silver becomes very difficult to acquire regardless of what the paper price says. I am going to be tracking the Strait of Hormuz blockade and the oil markets every single day. This is the most important macroeconomic story of 2026. The decisions being made right now about the Middle East, about the naval deployments, about Iran's response, those decisions are going to determine whether oil stays at 90 or goes to 150. And those oil prices are going to determine whether we have moderate inflation or hyperinflation, whether we have a recession or a depression, whether the silver market has a normal supply chain or a complete breakdown. Make sure you are subscribed to this channel with the bell notification turned on, because when oil breaks $100, when the next escalation happens in the Strait of Hormuz, when the freight costs spike again, I am going to be putting out macroeconomic alerts before the rest of the public wakes up. You need to be positioned ahead of those moves. Here's the bottom line. $90 oil is not just about gas prices. $90 oil is about the entire energy cost structure of the global economy shifting higher. And when energy costs shift higher, the cost to produce everything shifts higher, including silver. The physical silver supply chain is breaking right now because of energy costs. And the spot price bouncing to $84 is the market's early recognition of that reality. But 84 is not the end. 84 is just the beginning of the repricing that has to happen to reflect the new energy cost reality. I just posted exactly how I am positioning my physical portfolio to survive this energy shock to my private insider community. I broke down my allocation between silver and gold. I explained my strategy for dealing with rising premiums. I showed you which products to prioritize when energy costs are spiking. I gave you my timeline for when I expect oil to break 100 and what that means for silver prices. If you want to see how Captain Silver is protecting wealth during the stagflation crisis, click the join button below and become an insider member right now. The people who joined today are going to be positioned ahead of the energy shock that is about to devastate everyone holding paper assets. If you want to know the terrifying secret about why the Eastern vaults are literally running out of physical silver in just 15 days, because of this crisis, you need to click the video on your screen right now. I break down the exact math behind the Shanghai drain. Do not wait. Click right here and I will see you in that video.